All right, so it is my pleasure to introduce John Galkowski, who serves as a Senior Vice President of Cornerstone Mortgage. John was born in the Midwest in the suburbs of Chicago, where he lived until he was the age of 12. This is when his family headed west and moved to El Cajon. John is the youngest of 6 children who all live in San Diego County. As a youngster, John loved sports and enjoyed football, baseball, and wrestling, as well as the many fishing trips. Wrestling became his first love, and he pursued his dreams. John earned a scholarship to California Polytechnic State University in San Luis Obispo, where he earned his degree in speech communication with a concentration in business, and competed for the Cal Poly wrestling team. John married his wife Linda in 2003 and has been blessed with 2 beautiful daughters, Taylor and Tessa, and with the new addition of a family dog named Biscuit. Today, John loves activities with the family, such as camping with the RV, trips to Yosemite, Tahoe, or a trip to Cabo to enjoy the beach. It's my great pleasure to introduce John Galkowski from Cornerstone Mortgage.
Thank you, Ruben. I appreciate that. And it's great to see everybody. I know I've been off the grid quite a bit this year. It's been a roller coaster of a year with our industry and so many changes. But let me see if I could share my screen and I'll bring everyone up to speed here. Yeah, let's see. Could everyone see that? I can't hear anything though.
Yes, we can see it.
Okay, perfect. So, I'll start out. That's just where our office is, downtown San Diego. We're on the corner of Front and Market Street. That is the Pinnacle Tower, and the first couple floors are business commercial space. And we've been there going on about 7 years now. And that is the southwest corner. It's about a block and a half away from the convention center and the Marriott there in the Marina District. So it's been a nice, fun location, when there is some time to, walk by the water or whatnot. A lot of activity around there. We've been in that space, like I said, for a number of years. We've just been expanding. But before I get into the mortgage stuff, I'm going to jump into there's a lot of new members and bring you up to speed. I know Ruben mentioned some of the items in my intro there, but I am the youngest of 6 children, and amazing. My parents had 6 kids in 9 years. I don't know how you could handle that, but and that is me as a little baby, my brothers and sisters, and we all live here in San Diego now, which is great to have, the family close. Come from a big Polish family. My dad, youngest of 15 kids, and my mother was the youngest of 5. So lots of aunts and uncles and, family gatherings back in the day, not so much now. A lot of them are still back in the Chicago area. My mother was in real estate and owned a brokerage. I was early on, I guess, the first experience I had with real estate. And I always found it fascinating, even from a young age. As Ruben mentioned, love sports. My dad, absolutely huge sports fan. And I, baseball, football, wrestling. And after about junior high, everyone else was growing and I wasn't. So I kind of stuck to wrestling and found my passion there and wrestled through college, coached a year at college, ran camps and so forth before getting back into business and starting my career in the mortgage industry. Here's my family pictures, and as our dog Biscuit was a rescue dog, a little puppy, and I think she kind of runs the household these days, it seems. But we have a great time taking the RV, getting out to the camping spots, either the beaches or the mountains, and there's some pictures that help capture those moments. But fun times. Both girls are in middle school right now and doing home schooling with the Zoom meetings, just as we are. Let's see. Jumping back into Cornerstone and the mortgage side. Who are we? We're a mortgage bank. We specialize in residential financing, 1 to 4 units. And as a direct lender, we do control all aspects of the transaction from, opening and processing, underwriting docs, all the way through funding, which is giving us full control of the transaction. We don't service loans after the loan is totally complete and funded. We do sell them off for servicing to, a Wells Fargo, a SunTrust, some big mortgage bank who services, has a servicing portfolio as well. To give you a little history, we started Cornerstone originally in 1994, and I had received my broker's license. The current president who brought me into the business, Bill Manzi, one of my good friends that I brought in from Cal Poly, and one other person. We started, 4 of us in 1994, and we had that through 2008. Started with 4 of us. We grew to about 50, 55 employees, and things were going wonderful. And when 2008 and the financial crisis hit, we kind of abruptly closed down. And in hindsight, we wish we hadn't. But what was happening is in 09, when in 08 and into 09, with the mass amounts of foreclosures, what was happening was Fannie Mae and Freddie Mac were pushing loans back to the big banks, making them repurchase those loans to the tune of hundreds of millions. And then, the big banks were pushing back down to, everything started to flow downstream, started pushing to the correspondent banks and down to the mini correspondents. And we did not want to risk having to buy back millions of dollars of loans. And so we, basically made a decision and closed the doors. And as a group, no longer a formal company, as a group, we joined another company and we worked there for couple of years, and then things, the whole industry tried to kind of unraveled, a lot of consolidation, and then in 2012, Joseph, who started with us back in '94, him and I started Cornerstone Mortgage again, and we were through 2015 is actually when I joined execs under Cornerstone. Bill Manzi, who originally was the owner of the original Cornerstone, started another company, and then in 2015 we actually merged the two together, and so now we have a corporate name of Great Rabbit Home Loans that does a lot of online business, and then the DBA of Cornerstone Mortgage, where we are more the retail arm of the company. And so it's kind of like Cornerstone 2.0. What do we do? Majority of our business is conventional lending for helping people purchase or refinance loans. And, the conforming business is probably 90% of what we do, the conforming high balance. And that's where it's a conventional loan that meets Fannie Mae and Freddie Mac guidelines. And it's generally the best price with the most reasonable, cost breakdown and very flexible guidelines, not quite as much as FHA or VA, but for a majority of people, it's the best option. And that's kind of our bread and butter. I'd say about 90% of our business is conforming, with about 5% jumbo and then another 5% government on the FHA and VA. So we don't do a whole lot of governments, but on the purchase side, we see that. So 2020, what a year in many ways. Starting, in the fourth quarter of 19, rates started to drop and we started to see activity really start to increase, and we started hiring and planning to increase our office space in anticipation, but, really didn't know what was coming. But, we had started that process. We were able to start, demo and open up a space where we're going to add a few more 1,000 square feet, added a temporary space to, help accommodate our growth in the meantime. And so that was, coming into January, all of a sudden rates started to drop to record lows, and the amount of business that was coming in January and February, we hadn't seen, probably since '03. It was just, coming in fast and furious, and it was exciting, and we were growing, and, going into, wasn't soon. We come into March, and all of a sudden COVID hits us, and obviously that hit everybody, and a lot of uncertainty. And we basically had filled up every office space we had. We had many of us working remote, and construction got delayed. That temporary space we signed long-term, so we were, just putting people every which way we could. And the pipeline, was just growing and growing with a number of transactions coming in. Now, soon after March, say April, a lot of changes started to come in from guidance with new guidelines from Fannie Mae and Freddie Mac, and how to address the COVID income and qualifying guidelines. And one of the biggest changes, and this impacted some of the members of the club that I was working with, is that jumbo loans across the board got suspended right around 1st of April, something of that sort. And they just recently came back. So they were the first ones to just eliminate the products. I know lines of credits often, stopped being available. And then we started to receive guidance on self-employed borrowers and, how to underwrite those packages. And that was one of the biggest changes, because a great portion of our business is self-employed individuals. And just like, the room or the Zoom call is filled with self-employed people, there was a big impact. And basically, summarize it quickly, is that after a loan is underwritten and approved, then there's this new set of guidelines that kick in for the last 10 days of closing, where we have to validate and prove the business is still fully operational, get current year-to-date P&L, gather business bank statements. Even though we're doing a personal loan, where in the past we had always just use the personal statements. But what they would do, and we would also have to prove invoices and receipts, and document that they're actually receiving revenue in the last 10 days prior to closing loans. And not often, or not always, do businesses have consistent income. Sometimes it comes periodically, sporadically. And so that presented some industries challenges, more so than someone who has daily receipts. Give you an example. Let's say someone is self-employed and they have tax returns and they make $100,000 a year. You see it on their tax returns for a couple of years, and that's what we would use for the qualifying income. With COVID, what they would do is, now we have to look at the last couple months' business bank statements, compare it to the P&L, and that would be the income used. Now, if someone had to close from March or April through June, their year-to-date in June or July probably dramatically decreased from what they've had previously, but we were forced to use that income. So it started declining a lot of self-employed borrowers, which was frustrating, because they're good loans. It seems like it was going to be a temporary decrease in income. You have a long history. So it just challenging times to communicate that with borrowers. They actually have to decline borrowers that are good. Most likely it's going to be a perfect client long term, but they didn't fit the current environment. As the mortgage industry started to react to the guidelines and just the volume in general, I saw a lot of changes. And part of it is, a lot of companies just said, we won't do loans under 300,000. There's just, it's the same amount of work, but you make more on $300,000 or $400,000 or $500,000 transaction than you would for a $120,000 transaction. So they just, okay, we can't do all the loans. We're just going to do 300 or up. Other companies would say we don't do investment properties. Some of them would say we don't do self-employed. Some of them would say we don't do any of the, under 300 investment or self-employed. So they're just kind of cherry picking, the easiest transactions. And that sounds nice and all, but our long history and our borrowers are all, a good portion of them are self-employed, own investment property. So it just didn't make sense for us. So in the sense that we are doing all those loans, we have all those obstacles that we're having to deal with and overcome. And basically what's happened, the biggest difference is the amount of time it's taking. We used to be able to close loans in 30 days pretty easily, and a self-employed borrower with a couple investment properties is taking 60, 70, 80 days right now because of the process and what needs to be done. As we hit the summertime or spring approaching summer, we had a lot of people working remotely. I actually haven't been back to the office for a work day since March 14th. I've been sitting right here for, I guess, 7 months, and put it in long days, and just, we have, the office is maxed out, even though the expansion is completed. At this point, we're looking at, future expansion already again. And, give you an idea, just this year, we went from 12 employees up to 40 as of today, and we have more coming in. Many of you, I have shown my website in the tool previously in either a promotion or a previous concentration. And I always knew it was a unique, and I like to think a very powerful tool, but it hadn't really reached its potential in the past. It's helped facilitate some transactions, but it seemed like a few times I tried advertising, it just, there wasn't any return there. Other times, it maybe covered and paid for itself over, so many years. But Simon White from Local Blitz gave a concentration. I think it was end of May or sometime in May. And I was like, you know what, let me give this a try. And so I reached out to Simon, and we, talked about the tool and, the environment with rates being, all-time lows. Let's try it in this environment. And after a couple of weeks of putting some ads together, we started advertising on June 1st. And it took about 10 days before, as people start to see the ads. And after about 10 days, business just started rolling in. And by the end of June, I think I originated, just using that tool, of people all throughout the state, as much as we brought in last year. And we were all excited about that. And then July hit, and it was actually 3 times of that came in. And so it just became way overwhelming. And as an originator, that's a great thing. You just keep bringing them in, and then you turn around and you see the mountain of work and what we have to fulfill. So that's been a challenge. And, I had to reach out to Simon, turn it off, because we weren't scaled enough to just keep bringing that amount in. It's been amount of work, the expectations you have to set with people is that, most borrowers are ready to close in 30 days. And, we're accustomed to that as well. But even though you tell them it's going to take 60, 70 days, after 3 weeks, they're contacting you every few days. What's taking so long? So it's been a big part of just trying to set expectations and manage that part because the longer it takes, the more times they're reaching out. So that's been I think our biggest challenge. Although with all the recent hires, I think we're catching up. And I think, as we continue to do that, we'll hope to get over the hump soon. But for those of you who have not seen the website before, this is a snapshot of the homepage. And what's unique about it is this little tool right here, fast and easy mortgage rates in 10 seconds or less, and no personal information required. So with a few clicks of the button there, if you put the right information in and you reach out to the right people, in the right market, it's amazing. So basically, after you fill out those few questions, you hit search great rates, and this is what populates in 5-10 seconds. As you get a scenario of your parameters, and then you get rates, APR, payment, and the fee associated with that search and those parameters. And this isn't just an estimate. This takes into account the escrow, the title fees, your loan to value, your credit score, loan size. Everything that we would put in our standard pricing engine has been built into the website. So here at 2.625, this is a client from last week. They're getting a no-cost loan. Those lower rates with fees, that's the exact cost to the dollar. So it's not like it's going to change. I tell them, we'll lock that in for 60 days, and that's exactly what it's going to cost when you close. And so it's just so quick, easy, and the fact that people could jump on there who want to refinance, and as they call around the different companies, you get so many different stories, different terminology, and your credit before we formally quote you. It's the waters are very muddy, and part of that is purposeful, and they want you to commit and go down the road with them and get started. But it's confusing to borrowers where they just love it. And I knew they would, it just needed to be in the right environment. And so the response has been amazing. So all-time lows in July, and in August, we had a week where we had like 2.5% at no cost on a 30-year fixed. And I mean, the phones were, we actually had to start raising rates in a sense to try to slow it down, turn off advertising because it was just too much. But it just, everyone could benefit, it seemed. So it just added to the, the gridlock and the turn times. And, we're locking everything for 60 days and still needing extensions. And then everyone who locked at 2.75 all of a sudden wants 2.5% because rates are lower, but they're locked in, but it's not really locked, is it? So you just, a lot of redoing of loans and so forth. And just to give you an idea, in the normal market, our underwriting times would be 24 to 48 hours, and it ballooned up to 2 to 3 weeks. And right now it's probably 4 weeks, three to 4 weeks. And so that's our biggest challenge as an industry as well. Some of the other big banks, Chase and Wells, I think, they're up to about, 4 months is what I'm hearing Chase to do a typical loan with them right now. One thing that did bump rates towards the end of August is Fannie Mae and Freddie Mac announced that they're going to tax all refinances a 0.5 point effective September 1. And this was like the middle of August, a couple weeks out. And so there's a huge backlash on that. And they ended up pushing it back to December 1st. But knowing that that was coming, most investors priced that into their pricing of all their products. And so rates went up about 0.25%, not a full half. I'm not sure what's going to happen December 1, if we'll see a change, or I expect it to fully be already within the pricing at that time and not, have a jump at that particular day. So what are we doing? One, we got a tiger by the tail with the pipeline and everything we're trying to do, but, it also exposed, areas that we need to improve going forward. Where are the log jams? What can we do to overcome that? Who do we need to hire in what positions? But also trying to build for the future, because we know rates aren't always going to be this low. If they're going to go up, it won't. If rates go up 0.5%, I'd say 90% of the refinances stop, overnight. So we've seen that before. So we know that. So we have to gear up for the future and potential purchase market and just different rates. So a couple of things is we have our application submitted to Fannie and Freddie to sell directly to them. That will do a couple of things. Is one, you get better pricing. There's less layers of servicers involved. We could sell in bulk, and so it's a lot more efficient to sell. A bulk of 10 million or 20 million to Fannie Mae in one sale versus one at a time. It's the same amount of work, but just 1/10 or 20th of the work to get it done. And then there's less overlays on the guidelines themselves. And so you have more control and, more flexible underwriting. We're in the process of, redoing our CRM and our loan operating system, trying to use technology where people, could take a picture of their pay stub on their phone and it uploads right into our processing software, notifies everyone accordingly, and a lot of cool tools out there to really help speed and make the process more efficient. And then lastly is we're adding a secondary marketing department this year, hopefully by year end. So we'll have it in place by next year, and that's to basically manage the pipeline and the locks and the rate commitments. And by hedging that, generally, it should make pricing either one, create more revenue, or keep pricing more aggressive, or a combination of the two. So we're excited about that. Let's see. And as far as concentrating, what I would suggest, I know many of you have done this in the past, is to go to my website and try that search tool, run a quote, and then click apply next to the rate that you saw when you ran the quote, and it takes you where you can put your name and email and phone number, and just sends me a message back that you applied. You don't have to fill out an application or anything like that, but it just will walk you through the process, show you how easy it is to get those rates. And I would suggest, if you know of anyone who's looking to refinance and is not sure where to start or don't know what rates are or what's available, it's a great tool for them to go without having to have conversations, submit socials, or any information. So with that, I am done. If anyone has questions, I'd love to field those.